Hey everybody, hope everyone's doing well and had a good day. This video is going to be a brief recap of the Emini 5-minute chart for Wednesday, April 2nd, 2025. And I just want to remind everyone that these recaps are kind of like nutritional supplements. And they may be helpful, but they should not be watched to replace the Brooks trading course, just like supplements shouldn't replace real food. So if you haven't already, I urge everyone to go and purchase and study the video course, and you can find a link to it in the description of this video. That link will take you to the course and to the Brooks Trading Course website. With that said, let's get into the video. And today we opened with a gap down. If we look at the Globex chart, I like to look at the 15-minute, just to get an idea what we had going into the day. And here's basically what we had. So yesterday's close was around here. We had a tight trading range, bear breakout, and then consecutive sell climaxes. If you look to the left, what is the market cycle of this chart? It's a trading range. Big up, big down, big up, sideways, and then big down again. So yes, there's a strong looking sell-off, but look to the left, and the market is in a trading range and we're testing near the lows. So that's good to know going into the day, that we might be at support. With that said, we can also combine what we see. We can combine that with what we see on the day-only session. So if we really break things down, and even though this, you might call this a bear swing, right? Bull swing, bear swing, bull swing. They're basically like small trends. Even one bar can be a trend bar, or one bar can be a trading range bar. So you can call the sell-off from, this is yesterday, 34 down to about 65. You can call it a bear trend, but it's a minor bear trend. It's within a bigger trading range. But if we call it a bear trend, we can see what happened. We have a trend line, and we had a channel line. We broke below it, failed to break below it, so we broke below it, went sideways, went back and tested the trend line, and then the bulls broke that trend line with strength. And if we think through what's happening, we think about a major trend reversal. We have a trend line break, retest of the lows, and at this point, right from the open of the day, we have a possible lower low major trend reversal. And then look at the first couple of bars of the day, bars 1 and 2. Like I said over here, this is the bottom of a trading range. We saw this on the 15-minute Globex chart. So we know there might be support down here. This rally probably was strong enough for a second leg. It hasn't gotten it yet. Bear channel, bull flag. Was this the second leg? It might be. But now this sell-off might be strong enough for a second leg. And this gap down might be that second leg. This gap down, to me, I see it as a variation of a second leg trap. Leg 1, deep pullback, and then a very brief second leg in the form of a gap down. You can imagine the gap down is simply a bear trend bar. So from the close of 81 yesterday would be the open of the bar, to today's open would be the close. You can just imagine one big black bar, a bear bar. Leg 1, pullback. Leg 2, bottom of the range. And then you can see the reaction, bars 1 and 2. Bars 1 and 2, it is early in the day, but bars 1 and 2 are very strong. And the context is good for the bulls, bottom of the range, and a possible second leg trap. So bars 1 and 2, you can expect they're going to get a second leg up. We had a reversal attempt on bar 5, but do you really want to sell bar 5? Probably not. It's only one bar. It's a good looking bear bar, but probably more profit taking from the bulls than anything else. So after a rally like this, the bears probably need at least a second reversal What is a second reversal? When you say that the bears need a second reversal, what you're saying at the same time is that the bulls are probably going to get a second leg up, because you need a second leg for there to be a second reversal. So in this case, we got bar 7, but 7 looks like on this chart was not an outside bar. But earlier when I was trading on my execution chart, it was an outside bar. And the reason I bring that up is because outside bars are 1 bar trading ranges. They're expanding triangles, breakout below, breakout above. And because of that, we might get a deeper pullback. So we got selling bars 8 and 9, but the reality is there's a couple of problems. One, there's probably buyers below 6 and 7, bulls buying. You also have bears. If a bear sold below bar 5, taking a chance, they know they're taking a low probability trade. Relatively small risk, but big reward. You sell below bar 5, trapped on 7. What are traders going to do if we retest that stop order entry price? Probably going to buy. Bears who got trapped selling into a bad or into a losing position, they're looking to buy back their shorts at break even. Maybe they scale in, take profits at their original entry, and make money on their scale in. Then you have bulls who missed the rally and they're looking for a pullback to get long. This is still always in long, probably going higher. So everybody buys on bar 9, and we have 2 reversal attempts. So for the bears, you can call it a low 2, low 1 below bar 4, low 2 below bar 8, and the bulls have a high 2. And this might be a bull trend. And it's early in the day. It's hard to say whether this is going to be a bull trend day. But even if it's not a bull trend day, there's still probably going to be another leg similar in size to bars 1 through 4, more symmetrical than bar 7. To me, it doesn't look like the bears have done enough to be selling aggressively. It looks like we have to go higher to find sellers. And let me just speed it up a little. I want to talk about this channel. So the bulls had a high 2 in a possible bull trend. Again, it's too early to say for sure. And then just look at the rally to bar 25 and ask yourself, even back here, are stop order bears making money? Still below 5, 8, 13, even 20. Stop order bears are not making money. Even limit order bears having a hard time making money. If you sell above bar 5, then maybe you made money. You sell above bar 8, harder to make money. You sell above 13, hard to make money. It's a lot easier to make money buying, and asking yourself whether the opposite side can make money in a trend can help you gauge the strength of that trend. So in this case, we have a tight bull channel. Is it a strong trend? Well, the bears are having a hard time making money, even the limit order bears. So this is probably considered a strong bull trend. I will add that at the end of the day, it's subjective. Everyone will have their own definitions for everything. So it depends on how you define a strong trend and a tight channel. But for me, I like to pay attention to whether, in this case, for a bull channel, whether the bears can make money, how easy it is for them, or how difficult it is for them. And that's straight from the Brooks trading course. That's not my idea. So we finally get a 3-bar micro channel for the bears down to bar 28. But is bar 28 a major reversal or is it minor? We do not have a significant trendline break. We poke below the trendline 28, so bear breakout, but no follow through 29. It's also big up, big down. Now we may have pulled back more deep here because the bulls had maybe 3 or 4 legs up in the channel, and eventually you expect 10 bars and 2 legs sideways to down after 3 or 4 legs up. But when the channel is tight, it's a parabolic wedge. meaning that it's minor. And if we look at a 15-minute chart over here, you really don't want to be selling, even though you can see 3 or 4 legs up, and this is to about 11:30, so that's about here. This is the 15-minute chart, and do you really want to sell even below this bear bar? It's a good looking bar, but the channel is just too tight, and this is a breakout on a higher time frame. So any reversal will probably be minor. The bulls might see it as a great opportunity to buy at a discount, and the bears use it as a gift. If they sold lower, maybe the bears sell, 21, they sell anywhere. Bears selling anywhere, probably getting trapped, and they can use the sell-off. So you sold below 21 and sold more, maybe below 26. Bears just happy to get out at break even down here. So again, we're not breaking a trend line in a significant way. This is still a minor reversal, big up, big down. If the bears are going to get a second leg, you can expect a deep pullback first. And I did think the bears would get a second leg down after this, but here we pulled back about 50%. And you can see there was a bit of the market stalled at 50%. It was deciding, are we going to get a second leg down, or are the bears going to fail? 32, bull bar closing on its high, and then 33, a give up bar. So now the bull's getting a 4-5 bar micro channel. More and more traders buying, bears bailing out of trades, giving up, bulls trying to get long. This might have been enough to damage the bull case, weaken the bull trend. It's not as strong as it was down here. We finally got stop order bears making money. That's a warning that the trend may be getting weaker. But you can see even still here, we break out above 24, retest the breakout point, still get a couple of legs up. But up here, now we have 1 pullback, 2 pullback, another 3 legs up to 45. And when it's this climactic, far from the moving average, we're 40 bars into a trend, better to just exit longs below a bear bar. You can wait for a bar closing below its midpoint, 48. I certainly would not stay long below 48, as the bears now have a 3 or 4 bar micro channel and a bear bar closing on its low, and we're still far above the moving average. And we just had 3 pushes up. Again, this is a parabolic wedge, so you expect a minor reversal, but the minor reversal grew into a very significant trendline break. Bull trend is a channel, and the bears break the trend line. It's unlikely that we just continue to fall for the rest of the day. Bull trends usually do not become bear trends, so what's more likely is we will retest the highs, and then the bears can go for a double top or a lower high major trend reversal, but the odds are we're going to retest the highs of this bull trend before the bears get a major trend. And then this pair of bull bars, 61, 62. 61's a bar, you might just exit shorts above. Now we have a couple of legs down, might be 3 pushes down. 1, pullback, 2, a pause, and 3, testing support. We're testing this area where the bears got trapped before if you sold over here. And the market rallied, still came back and tested here, but now this might be the bottom of a trading range. Also keep in mind, with major trend reversals, you only get a major reversal about 40% of the time. More often the market converts into a trading range, so we might be at support at the bottom of a trading range here. The approach is strong and it's aggressive to buy above 61, but not unreasonable because you probably have bears exiting above 61, looking to sell a pullback instead. And then you got a strong pair of bull bars. That's enough for a second leg up, so the market may be flipping back to always in long. Still got a deep pullback, retesting the close of 60, but the bulls still got their second leg. Maybe leg one, deep pullback after a high 2 attempt, high 1, high 2, the bulls got their second leg. And you can see bar 81 retesting the bull trend's extreme. So the bull's able to get a really good looking bar for the daily chart, basically opening almost on its low and closing almost on its high. We can see it here. So a really strong bull bar on the daily chart, but lots of trading range price action through here. Big up, big down. Again, the bar looks very strong, but we had very tight bear channel here. And if we think about what's happening on the daily chart, the market is retesting, or it's pulling back. The bears had this sell-off. We're getting a pullback, testing breakout point. We're testing the moving average. Breakout point here, breakout point here. So there might be sellers not too far above. That might be an area of interest for traders to sell. Anyone buying below this bull bar, trapped on the sell-off, retesting it here. But the bulls are hoping for a major reversal. Bear trend line break, lower low major trend reversal, and then continue to rally. But more likely, we'll probably start to go more sideways, more horizontal through here. That's going to be it for this trade recap. And again, if anyone's interested in the membership portion of this channel, you can find information on that in the description, so I won't go into it here. But that's going to be it for this review. So thanks everybody for watching, and I hope everyone has a good night.